All right, welcome. If you are watching this live, let me know where you're tuning in from. If you're watching the replay, give me a hashtag replay. Let's get this thing shared. How is everybody doing? Welcome to this stream. I would send this out to any friends or family that you know that are into crypto, that are into real estate, that are into the investing world, that are into trading, that are into anything like that. Excited to be here. My name is Mike Sotero. If you've never seen some of these streams, I've been an entrepreneur for the past 11 years. I've done very well. We've taught hundreds of thousands of students all around the world. We got London in the building, Fort Lauderdale in the building, Cyprus in the building, India in the building, Canada. And today's a big day. Today's a really big day in the world regarding crypto, regarding the US dollar. And we are going to be awaiting, and we're going to actually listen in to Mr. Jerome Powell live here on this channel. So hit that like button. If you're new here, always, hit that subscribe button as well. Let's get the message out. But we're going to watch this live. So put a 1 in the chat if you're ready to watch this. We'll spend about 15-20 minutes. We'll see if the market reacts. And then obviously we'll maybe even look for a couple trades on this stream. So excited that you're here. Let's talk about it though real quick. What's about to happen in the next couple of minutes? Well, in 13 minutes, you have the Federal Reserve, right? Mr. Jerome Powell, who's in charge of the Federal Reserve. Now, the Federal Reserve is not the government, quote unquote, right? It's its own entity. They make their own decisions. They have a goal, right? A goal to keep inflation at what? At 2% in America. So year over year, their goal is to have inflation at around 2%. We've had inflation. Now, we know that inflation is not 2%. But on paper, inflation has been going down. So it now allows Mr. Jerome Powell to finally start to cut rates. Now, I'll explain this to you in real simple terms. When rate hikes are happening, so when rates are going up in a country's currency, usually that currency gains value. When rate cuts are happening, and we're going to get the first rate cut here in over 2 years, usually that currency loses value. Put a 2 in the chat if that makes sense. North Carolina, good to see you. What's up, Juan? Good to see you, Andy. Glad you. Finland in the building. Amazing. So if in Europe or if in Japan, if there's speculation that rates are about to be cut, you will see that Japanese yen or that dollar or that euro fall. And now, does that money just disappear? No, that money is moving. It's always moving. Okay. I actually just got home from the gym and I was talking to somebody that stopped me and we had a little quick conversation about this and they asked me what I thought. And, you look at this chart right here, the dollar, right? This is the dollar. Now, in my opinion, I think we will see the dollar at some of these levels down here. Maybe not right away, but based on higher time frames, I could see this thing falling. And if the dollar were to make a push up, we could see something like that. Maybe like a sweep, rejection, and then come back down here. What if he pauses? If he pauses, then we are going to have a lot of volatility on this stream. So let's hope that doesn't happen. If you're just tuning in 10 minutes, we're going to have Jerome Powell live on this stream. We're going to watch the market. We're going to see how the market reacts live. He will actually be speaking at 2:30 p.m. So we're going to get the rate announcement, and then we'll do a little bit of Q&A, and then maybe we'll actually stay and we'll watch a little bit of the stream if you guys want. So let's go back in time, and let's actually take a look at what has happened over the past, let's just say, since the 80s. Now, here in 1980s, we're going to look at the US dollar, or excuse me, in the US economy, what interest rates were. So interest rates, for our parents or maybe grandparents, maybe you, that's great too. They experienced rates being 14, 15, 16%. But also the prices of houses were 80, 90, 100K. But that was it was normal. And when rates started to get cut, I want everybody to kind of see here what happened in 1980s. Okay, going from 1980 to 1984. let's actually take a look and let's go back in time and let's look at what happened to the stock market, the S&P 500. If this wants to load for me. Everybody's on TradingView right now anticipating these rate cuts. So let's go back into the 80s. Now, that was an aggressive cut. We are not coming from 16%, but you can see here from that 1984, or excuse me, 1981 to 1984, rates were being cut and the stock market went absolutely crazy after that cut. Now, does everybody see this in the market? You know, you have like this aggressive sell. You have price create some liquidity, price trade into this candle, boom. Price breaks out, price pulls back, price breaks out, price pulls back. I can probably guarantee that people were like, it's going to sell off. And then you go to like, let's go back in time here, 2008. And let's kind of take that in alignment. If you don't know, in 2008, a lot of people in America got destroyed. 2008, okay, rates were up here. Rates were at 5%. Watch this, a very similar number to what we have today. Okay, pay attention here. And I'll look at some charts here after they make the decision. I'm kind of watching the stock market on a few of my screens here. But take a look at this. 2008, rates were about similar to this price. Okay, 2008, rates start to get cut and everything fell. Okay, or excuse me, sorry. Before rates got cut, everything fell. Rates cut starts to happen. 2008, 2009, we come down here, and then the market absolutely explodes to the upside. Okay, so now let's take a look at where we're at here today. Now, stock market's at an all-time high. We have an election coming up in less than 50 days. It's crazy. It's a crazy time, but it's also an opportunistic time. How many people know what just happened with Bitcoin? Put a 1 in the chat if you are a Bitcoin or a crypto investor. Put a 2 in the chat if you do crypto and you do stocks. We're going to take a look at some coins here. What charts and pairs are you watching today? I'm taking a look at a lot of cryptos, and I might even take a look at a couple Forex pairs. So stupid ads everywhere on this freaking website now. But if you go and look at what has happened with Bitcoin historically, you know, like 100 days after the election, 100 to 200 days after the, 100 to 200 days after the halving, you can see here, Bitcoin loves to break out post-halving. And it's funny because I put an Instagram reel when Bitcoin was around like 50 something, saying the halving eventually would lead to a bearish event. And eventually we got that bearish push down. So the halving happened at 66,000. What's the price of Bitcoin here today? A lot of 1s and a lot of 2s. Great. Bitcoin's at 60,000. And here's what I'm looking at for Bitcoin. TradingView is lagging because everybody's looking at these charts. I like this level here to hold. Okay, if you've been following my channel, we nailed this right here. We saw this huge spike in volume on Bitcoin come in at August 5th. We were looking to trade into this level right here. We had price break structure. This high is higher than here. And then we had a fib from this low, from this wick to this wick. Price came in. And this is why all my students, all the people in my inner circle, we were able to capture another good entry on a lot of other cryptos. And I'll give you a couple here because I'm feeling nice. I'm not going to show you everything, but we got 5 minutes until the rate cut is announced. We are going to watch a little bit of this. Jerome is not speaking until 2:30, so if we get this stream to over 120 people, we'll actually watch this live and maybe we'll look for some ideas. So hit that like button, subscribe button, and share this with a friend real quick. If we get this above 110, 120, we'll stick through and watch a little bit of this. So you look at August 5th, okay? And then you look at September 5th, September 6th. This was an idea that I called out right here. This is on a crypto called Tau. It has 21 million tokens. Market came down August 5th. all the way to 160. We broke out, broke structure, took out liquidity. All my students got this position at 225. I can show you the documentation, but if you're one of those students, let me know in the chat. 225, we called this out, boom, immediately we're up. How often do you go live? From time to time on YouTube. I do a lot of stuff outside of YouTube. What coin going up? Well, everything will probably go up or go down together here. Now, remember, if you're newer to trading or investing, speculation can drive price, and it could drive price either up or down. So when you look at like Bitcoin fell on August 5th, broke out, came back down September 6th, that's 1 month later. Okay. Now, if price comes back into this level for BTC, I would be very excited to add some leverage positions here. And then I would be excited to look at, you guys see I got a haircut, right? Yeah, if you know, you know. Ross, you're funny, bro. I would be excited to look at some altcoins to get some better positioning. Okay, guys, we're 3 minutes away. First rate cut. Put a 2 in the chat if you're ready. I'm not going to play any music here because YouTube kind of trips out about the audio and stuff. We're on this free website, Forex Factory. And we're going to see here. Oh, look at this. They got a timer. Now, real quick, as we go into this, a couple quick things. Today is not a day that you should immediately start buying things, okay? Today is not a day, and you might want to share this out with a friend that might need to hear this. Today is not a day to like put money into the market unless the market reverses, okay? That is how you get crushed in this thing called investing, okay? And if you have not gone through this, you know, this is something that I put together. It's 100% free. I'll put the link in the chat. happybullrun.com. I break down, okay? I put together a 3-day course. It's completely for free. happybullrun.com. The link's in the chat. Go through that. And I talk about on day 3, like, this is a long-term game. Like, you can obviously see here, if you bought like major dips in Bitcoin the past couple of years, and hopefully you've been following me, like we accumulated all these drops. And I remember when everybody was screaming, well, let's just look at last year, for example. Last year I was in Europe for majority of the summer, and I was in Europe doing events all May, all June, all July, and it looked very similar. Okay. This was last year. This is 1 year ago. Bitcoin was at 25,000. Okay, how many of y'all see this? This was last year, and this is a very similar move to what we could see Q4 of this year. Price kind of goes sideways. Then you get the break of structure, market pulls back, and then we go crazy. And then people start thinking the market's going to reverse, and it just continues to go higher. So we're about a minute away. We're going to see here. We'll actually watch a little bit of this live. Let me put the audio on. And let's listen to what some of these public figures are going to say about the markets. Okay, let's see. We'll come to this here in a second. I want to see this update here real quick. Actually, let's go live here.
We saw some of the busiest days we've ever seen in the high-grade corporate market in America. Tons of demand to back it up.
And when you ask people why, they say there's cash out there and people want to lock
in audio
before some of those rates go down. I love this story idea that basically you can come up with a story for stocks, but the story for bonds doesn't work logically with where it is right now. And that, I think, is the key. If you're storytelling, stocks actually make more sense right now than the story that is the bond.
Okay, I don't want to hear that BS. Let's wait for the cut. You guys can hear the audio? Okay, this thing is lagging. You guys are going crazy in the chat. Good to see you guys. Let's get this thing over 110, and we're going to listen to Jerome Powell. This thing should be coming in here at any second. Remember, they're forecasting 5.2. So if we get a 5.0, which means 0.50 basis points, we could see the market react very, very aggressive here. So let's see. There goes Bitcoin. Oh, this thing is lagging. Oh, this thing is lagging. Everybody's on TradingView right now. Did we get 50? Bitcoin is going crazy right now. Bitcoin might break that liquidity live on this class. Did we get it? Let's see. If you guys see it before me, let me know in the chat. This thing says pending still. Bitcoin looks strong. Our Solana position, if you know, you know, never hit stop and is actually pushing right now. Let's see how this is going to react. Does Bitcoin break this high? It might live on this session. That might play out. Let's see. We are waiting. 0.5? 0.5! Cut the market! Cut the market! Let's go! Cut the market! Here we go. Let's see if we get a nice push here. 50 basis points. Jamie Dimon was actually right for once. 50 basis points. We are probably going to see
the risks to inflation and the labor market are roughly balanced. While they do not explain why they decided on a half-point reduction, the statement says the committee is strongly committed to supporting maximum employment. And remember, in Jackson Hole, Chairman Powell said any deterioration in the labor market would be unwelcome. There was one dissent from Governor Mickey Bowman. It's the first dissent by a Fed governor since 2005. It is the first dissent by any member of the committee since 2022. The statement adjusted to say the committee will, as always, carefully assess incoming data, quote, in considering additional adjustments. There's no changes, guys, to the QT portion of the Fed's policy.
Mike McKee, stay close. We'll come back to you. Here's the price action in response to it. Knee-jerk reaction. It's the first move.
All right, we'll come back to these guys in a few minutes, but 50 basis points. Okay. Let's see what's reacting here. Let's see if we get some pullbacks. Sol is breaking out. We actually had a position at 129 on Sol. Let's see if we can hit exit 1 on the stream. Now, remember, news sometimes we get the big spike, but it doesn't mean that this is going to stick and this is going to hold. I am curious here to go to my watch list and see what is running right now. Nothing really crazy. You see, watch, the dominance of Bitcoin is probably going up right now. Of course. Dominance of Bitcoin. And if you guys have been following my channel and following me, I've been telling you this, been breaking this down here for months, maybe even over a year, talking about Bitcoin dominance needs to come back into the 60s before we can get an altcoin rally. So we might necessarily not see a big spike up in price right now on alts. Dollars falling, dollars reacting exactly how we've been wanting it to the downside. Will this thing push and maybe even fill like one of these candles right here? Maybe we get something like that and continue to the downside. Something to watch here. Jerome is coming on here in a few minutes, guys. Yields are falling. Let's take a look real quick at what the stock market is probably doing. There goes gold. Yeah, everything is going up right now. Gold is sitting at 25.81. And honestly, I think Bitcoin is going to do what gold just did. I think Bitcoin is literally like somewhere like here and is going to have that similar breakout to the upside. US 30 all-time high. Nas 100 has not yet broken out. I don't trade Nas personally. That is a crazy wick right there on that broker. See how Bitcoin just came up, wick this level. Bitcoin can reject here, and that's why I kind of have this drawn out. Bitcoin could easily reject this high, come back, slow down, and then make a move. So that is why we don't buy the news, but long term, that is pretty good for all of us here. If you guys have any questions in the chat, please drop them. Taking a look at like euro to the dollar. So like euro just mitigated that candle right here. That'll be interesting to see if it holds. That's actually not a bad level right there. This might even actually reject euro dollar. That could even fall right there. We'll see. First time live here. Good to see you. If this is your first time live on my YouTube, let me know in the chat. Make sure, you obviously hit subscribe. That's obvious. Dollar's falling right now. Okay. Dollar's falling. Let's go take a look real quick, guys, at CME Group. Whoops. This is a website that it's free. This has been pretty accurate at predicting the probabilities. The next FOMC meeting will be in 49 days, 2 days after the election. So this was the first major event now going into election November 5th. How do I think Bitcoin's going to react? I think it's going to react bullish to that. But don't get caught. Everybody's probably on this website right now. Let's see if this thing can load for us. Don't get caught buying right now, and then you get stuck in drawdown. This is not loading. Let's come back to that. So dollar's falling. The question is where will the dollar reverse from? Can we get some can anybody get this website to load? Here we go. Here we go. Here we go. ETH going up? Yeah, probably. I mean, not really, actually. I actually like. I really wanted to see 2,200. We still might see that. If we see 2,200, I'll look for a buy on ETH. I like ETH at this level here. ETH just created this huge level of liquidity right here. So I'd like to see something like this actually take place for Ethereum. And it might even play out like that on Solana as well. LITUSD on, I don't know what that is. Can you just talk about Algo? Yeah, I could take a look at Algo, man. Algo is definitely one of those projects to pay attention to here. I have this zone marked up. I actually love this zone for Algo. Here's a free idea here on my YouTube. Algo between 8.5 and 12 cents. This looks really good. I actually love this level to dollar cost average. So here's a little gift for y'all. DCA zone algo for sure on this level. Yields are falling. 50 points is crazy. Well, according to this, this actually did give us like a 60% chance that we were going to get it. And, you know, why this, when Jerome speaks in about 20 minutes, it's really important that we all listen to his tonality, like his voice, you know, because we could see a tonality of, hey, we're not done cutting. And remember, remember that aggressive of a cut, 50 basis points, it made sense because previous, this right here is called CPI. Okay, this is the inflation numbers. Does everybody see here in the chat? Let me know. July of 2022, like in my opinion, we've been in a recession. People are still dealing with crazy inflation right now. But inflation on paper, it's been dropping. Now, remember, what is the Fed's goal? The Fed's goal is to make sure this number on paper is going close to what number? Put it in the chat. 2%. So if this number on paper is going down, which it has been, and the last previous forecast or the last previous report was 2.9 year over year, and if you guys caught this on September 10th, there was the debate. I believe the debate was the 10th, right? During the debate, we went from 2.6 forecast to 2.5. And I texted somebody, I was doing something, and I was like, look, we're probably going to get that number because they changed the forecast. Next day, boom, 2.5. So that's such a big drop off in inflation that Jerome's going to probably talk about how we you know, inflation's going down. It's a good thing. But how many of y'all know inflation is not going down? Like, that's BS. Inflation is not going down. You see it in the grocery store, car insurance. I looked at my car insurance statement for the first time on my State Farm app, and I didn't even like notice, but I'm paying like $30 to $40 a month more than what I was 4 years ago when I got that insurance policy or whatever, or 2 years ago. That's crazy, right? So inflation is still going higher, but it sounds good. And now let's see if this will load here, because everybody's probably on here trying to check. There's a box here that needs to load. Really interesting. Really interesting here. But just once again, don't get caught on the wrong side here, everybody. This is not the time to go be buying a bunch of cryptos and stocks right now. Why is this frozen? Trading view is literally down right here. See how Coinbase reacted off this level. Looks nice there. Remember, news is the excuse. News is the reason. News is the excuse. I mean, we've been watching like PayPal. How many of you guys have been watching some football? Don't lie. And you've seen some of those PayPal commercials with Will Ferrell. PayPal's making a lot of moves here. What does the cut mean? Yeah, we have a lot more people on here. I'll explain it real quick. Okay. When rates are going up, okay, the currency, so like in the US, we have the US dollar, right? The world reserve currency. That's why it matters so much. When rates are going up, the dollar, like the strength, essentially, I spell stuff wrong. The dollar goes up. Okay. When rates are going down, money leaves that currency, and it doesn't just disappear, but that currency value goes down. So where does that money go? That money goes into the stock market. That money can go into crypto. That money can go into real estate, right? How many of you guys have friends in America that have said, when rates go down, then I'll go buy a house? The real estate market is going to be very interesting to watch now that we've gotten these 50 basis points. Okay. And let's see who's talking about the rate cuts right now. I'm in a couple group chats. It's going to be very interesting. Okay. So does this make sense? Let me know in the chat if this makes sense. And it doesn't happen right away. Usually like there's a lag. Okay. I don't expect everything to go crazy to the upside right now, because what happens is things get priced in, right? So the market sometimes prices things in. So if the market thinks Fed's going to cut rates, which they have for the past like weeks and months, we start to have these big sell-offs, right? Aggressive sell-off, big push down. But in reality, was there a reason to panic or to freak out right there? This was prime time buying, and this is why I deployed a lot of capital here August 5th into a lot of positions here. In one of our rental property, $2,300 per year to $6,100 per year. That's crazy. Makes perfect sense. Makes sense. So that's what we're waiting for. Let's see what's going on over here on Bloomberg.
Bronner and Bernstein never dreamed of. Diane Swank, is this a Fed just dealing with our stimuli? Is this a Fed just dealing with debt and deficit to the sky?
You know, we've had everything you could possibly imagine pushed up inflation, and now we're seeing it come down despite the fact that we still have a lot of debt. So, you know, on the margin, yes, we do have high debts, and I do believe we need to deal with that at some point in time, and I don't think we have anyone who's willing to talk about it on either side of the aisle, which is another issue, and we can talk about that at a later date. But right now, we've got a Federal Reserve that's no longer buying that debt, and you've got a Federal Reserve that is seeing inflation come down despite the fact that we have high debt. And that's because on the margin, after we get past the sort of 6 months that we put a whole year budget into, from March into October 1st, you get a continuing resolution at best through year end, and you're going to get more constraints on spending, I think, as we get into 2025. Diane, one reason.
Yeah, she just actually made a really good point. Like, eventually they're going to have to deal with this situation. But do you think they're going to deal with that 48 days or whatever it is before an election? No. Remember, we have an election in 48 days. And it doesn't matter who you... Oh, here we go. It doesn't... Let me make this point and then we'll go here. It doesn't matter who, like, you like or you don't like. If the market thinks one person is going to win and the percentages is in their favor, the market could react a certain way. Vice versa. If they think Kamala is going to win, the market could react. If they think Trump's going to win, the market could react. Okay? And it's not necessarily about, well, I'll make that statement after, okay? So this is something that eventually they're going to have to deal with. Credit card, all-time high in debt. I mean, everything is it's not even real, right? So they just cut. Let's take a look, okay? We come to this website, we click on probabilities. And yes, they have to deal with the money printing. Exactly, Maria. So when rates are coming down, remember, it's easier to borrow money, which eventually will lead to more money being printed. This is extremely bullish long term. What's going on here? This is just not working right now. Okay, what is this showing us? Okay, they changed how it is now. So what the hell did they do here? Why is this not working? All right, this side is broken. So anyways, let's take a look at some of the markets. If you guys have some pairs, yes, I'll be live on my other stream at 3 p.m., my private stream. But we're just having some fun here right now. Let's take a look at Solana, how a lot of these altcoins are just reacting. Huge spike. Now we're going to see. You might get some really nice price action here. Market traded in here and then reversed. We need to see. We need to see how this is going to react. We need the market is really waiting for Jerome to speak in about 13 minutes. And if we keep this stream rolling and you guys have some good questions, we'll keep it live and we'll listen to Jerome speak live and maybe catch some of that volatility. But it's a definitely exciting time here. Anybody know anybody that's quit like investing or crypto or stocks recently? Let's pray for those people. We got Robinhood. Let's go to my list here. Really nothing crazy. Nothing is really jumping out like 5-10% stock. Like nothing's really going too crazy yet. And my belief is a lot of that was priced in. But a lot of that could spin to the upside if Jerome starts screaming, hey, we're going to continue cutting. We're going to do another. Because remember, they have a cut in 49 days on November 7th. And then they have a cut. Oh, here we go. So we just got this. So we have another cut on 11/7. So think about this. Everybody think about this for a second. We just got the rate cut today. So Jerome's about to speak. What we want to do while he's speaking is really listen to the language, because that's going to lead to narratives and stories, right, that people are going to start to believe. So let's really listen to the language that he uses. Then we have election. Okay, this is the next major event in America, November 5th. Then we have a rate cut again on November 7th. Okay, then we would have one more rate cut this year on 12/18. Now, this is where I could see them pausing if something goes wrong here. But let's say they don't on December 18th. Okay, so these are obviously some major things. How many of you guys have seen a lot of things happen in the media? People getting arrested recently, people, a lot of distracting things for the average person, you know. And if you're in this investing space and you go back and you look at 2020, what was one of the biggest distractions that the world dealt with? I'm not saying it wasn't real, but what was the distraction? Go look at the markets. In the 1980s, what happened? In 2008, what happened? In every expansion in money, right? Because when you look at this number right here, global liquidity index, the world has the most amount of money. See if we can pull this up here real quick. Right now in the world. Let's see if this is a good chart for us to look at. Okay, there's no chart here. Let me see if this one works. No, that's not what I want. That is a good chart. But basically, the global liquidity index is at, oh, this might work here, is at pretty much all-time highs, which just means that there's more money in the M2 money supply here. I mean, you can kind of get the point here. Global M2, right? You guys see that number right here? That's of March of this year, 93 trillion. So there is literally more money in the world today than there was when Bitcoin hit even 73K. And there's a dramatic more money in the world today than when Bitcoin hit in 2017, when it went from 1,000, when it did a 20x, and then it went from 4 to 40, which was a 10x, but then really 4 to 70. So it did like a 20x again almost. So if Bitcoin does a 20x from this price, I mean, you can think about the price where it'll be. Okay. So we have a really important time in history, and Jerome is going to be speaking here in 9 minutes, so don't go anywhere. His language is going to dictate a lot of stuff. Now, remember, you currently have right now a Democratic vice president running for president, right? And one of the things that the leverage that they have is that the markets are going up. You guys see how this is like not orchestrated, but it's orchestrated? That's leverage, right? During the past presidential campaign, we had a great market as well. So there's all of these things that just have to like happen. So I don't want to go too deep down the rabbit hole with y'all here, but I like this level on Bitcoin. If Bitcoin were to make a return back into the zone, I like it. We had a very, very big push to the upside here. And if you guys just got on here, I actually gave out a project to go do some research on. It's an AI project. We caught this on September 6th, all my students. You guys can see that right here. We caught this at 225. And if you're new to crypto and you don't know where to go, I do have a completely for free 3-day course called happybullrun.com. Go through this. We'll send you the credentials to log into your account. And I would highly recommend going through this. I talk about all the different ways to earn from crypto, entries and exits. I actually go over my strategy. And then I give you a 4-year game plan. So happybullrun.com, take a look at that. But TAO, this is a very interesting project. Not going to go too deep into the project on YouTube right now, but it's called BitTensor. Grayscale just launched a fund. BlackRock is involved. It's one of those projects I think will lag. It has a very limited supply in tokens. I have zero affiliation, obviously, but just a disclaimer. We've seen about 4 billion in it. It's at about 2 billion in market cap right now. Go do some research. All right, we're going to have Jerome here in a couple minutes. If you guys are just getting on here, we just had a 50 basis point cut. What does that mean? It means that we could start to see the dollar taper to the downside, and we're already starting to see it. Have you heard of Atlas? Yes, I was an early investor into Star Atlas, caught the huge run to the upside. And yeah, I actually like where it's kind of at. We're seeing the dollar fall. Okay, this right here is the DXY chart. When you see this chart to fall, not right away, but necessarily or typically you'll start to see other risk on assets start to go higher. Stocks, commodities like gold. Okay, let's take a look at the price of gold right now. Gold is at 2,600 an ounce. Good Lord. And like, does everybody see here? Put a 1 in the chat. If you see here, like market rallies, pulls back, rallies, pull back. And everybody's like waiting for like a crash. And then it just pulls back, continues. Like gold, in my opinion, is going to lead the way. And Bitcoin should follow this similar type of price action. You know, and a lot of people thought it would be backwards, but I really like how gold is moving. And it looks like Bitcoin, aka digital gold, limited supply, a real limited supply, could start to move. Okay. Forexfactory.com. Once again, 50 basis point cut. We were at 5.5 about. Now we're at 5. We are going to get the official FOMC press conference. We'll watch a couple minutes live together. So get some popcorn, stick around here. Let's see what the market does. Usually when Jerome speaks, the language can lead to a lot of speculation and price moving. I do like Ethereum on a higher time frame. I actually really like this level. And when we look at something like ETH to Bitcoin, this actually just hit my zone. I've actually been waiting for this. This actually just hit a 2-year low. Wow. This is how you know altcoins are going to be getting ready to run. Okay, this chart right here is Ethereum versus Bitcoin. Very simple. When this chart goes down, BTC gets strong. When this chart goes up, ETH and alts strong. Does that make sense? This is at a 3-year low. And if I was a betting man, which I am in these markets, oof, this looks so good. This might take a couple months, but I'd love to see this start to slow down. Volume to the downside. We're trading back into this level here. Be patient here, but I think this is where we catch the big move in altcoins in that's the run right there. That's the run right there. Riot's having a pretty nice day here. Nice. All right, guys, we're about 2 minutes away from Mr. Jerome Powell taking the podium, where he is going to speak about his decision and the Fed's decision to cut rates. Okay, we can read this real quick. The rate decision is usually priced into the market. So they kind of even say it here. So it tends to be overshadowed by the FOMC statement, which is not true in my opinion. Short-term interest rates are the paramount factor in currency valuation. Traders look at most other indicators to predict how rates will change in the future. Now, we know that in a time of rates, okay, this chart represents rates up and down. Yeah, I do spot trading and leverage. When rates are going up and rates are going down, historically, rates going down is a bullish environment for assets. Okay. So let's actually remove everything here. We take a look at Bitcoin, yearly time frame. And I want you guys to take a look. Actually, let's go down here. Pandemic, COVID low. All-time high in the last bull market. The market retraced exactly 80%, and we ran. And you know why a lot of people are screaming for like 174K Bitcoin is because they're looking. I'm going to give you a little secret here because you're live. They're looking at this negative 61.8 extension. This is like why they're giving a lot of those like analysts are giving that prediction. Should you wait for these numbers? Now, I like this zone. I think we will go into this eventually, obviously. But what if Bitcoin goes to 130, 137 or 140 or 145 and then creates a lower high, breaks structure, and then comes back down? So just don't get caught on the wrong side of things, okay? Guys, we're like
economy that is in a trajectory that
seconds away from watching this. We're going to watch this thing live. We'll look at some of the price action that we might get here. But guys, this looks super nice. If you guys see how Bitcoin is kind of like slowing down here, oh, man, most people how many of you guys know this? What do you think what will happen with low cap coins? I think they will lag, but I think a lot of low cap coins are going to get destroyed on the next pullback. So be very careful with low caps. Have a small percentage of your portfolio, Renzo, in low caps. Kevin said, are you spot trading? Both. Right now, I'm not doing anything. I'm watching. On days like today, I already have my positions. So like, I'm not going to go into the market unless I see an aggressive sell-off. I like ETH. ETH is a really nice setup if ETH can pull back. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year.
I'm going to take some notes, guys, and go.
In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasts.
I'm going to explain some of these basic things here in a few minutes, guys. I want to just continue watching this for a couple more minutes.
The median projection in the SEP for total inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight.
Still are.
Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance. And we are...
Oh, hell no. Oh my God, what the heck?
...to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting.
Uh-oh, that's good. That's really good.
That reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025.
Lagging.
These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Yep. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country.
This should break
Everything
here.
we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Oh, that was quick. That was quick.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking our
Let's
questions.
listen to a couple questions.
In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you weren't thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead?
Good question.
Based on what should we make that call? Thank you.
So, okay, a lot of questions in there.
Mess up.
Since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. So we took all of those.
Answer the question.
And we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So
answer this, Jerome.
A couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the S&P that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members, rather, of the committee are thinking today, assuming that their particular forecasts are realized.
Good, Chris.
All right, last question, guys. Then I'm going to give you some thoughts. So we're going to wrap up.
Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, and they would say there's a wide range where that could fall. So I think we don't know.
All right, let's get into some things that he said so far. Markets reacting. Put a 1 in the chat if you understood a good amount. I have some notes here I want to share with y'all real quick. So a couple things that he used. Now, I don't know if you guys heard this earlier in what he said, but he said inflation fell to 2.2, and this reported 2.5. I don't know if you guys heard that. So does that mean inflation is actually lower than they reported, and the next report is going to be 2.2, which is going to lead to another 0.50 basis points? Think about that. He also talked about how consumer spending is up. So when consumer spending is up, it's like less of a sign that we're in like a recession, which is like stupid, but that's just how that narrative goes. So if people are spending money, we all know they're probably using credit cards. It's actually a good thing. He basically said like less people were getting mortgages, like less people were applying to get houses because rates were so high. He talked about having a 4.4, getting unemployment, which is really going to be the issue here now. Unemployment, he wants to keep it around 4.4 or lower. We had 4.2 on the last report, so that's, I guess, pretty good. He talked about, he used the word confidence about inflation going down. That's actually very, very good. He talked about unemployment could be the risk, though, right? Unemployment going back up. If you guys see here, unemployment data, right? During COVID was really bad. Unemployment needs to be around 4%. He did say something that's important. He said, we are not on any preset course. Yeah, Lars caught it. We're not on any preset course. So they're going to go from meeting to meeting. And I don't know if you guys heard, but there was a rumor. I think it was, I forgot who sent it, but there was a letter that he received demanding a 50 basis point cut. And his role is not supposed to be influenced by other people. Like the Fed is supposed to make what the Fed's role. He said unemployment up, but still low. Yeah, correct. If unemployment gets out of hand, which it could in the next couple of months going into next year, that could be something that we need to look at. He talked about how they're prepared to respond. He gave the 2 goals, right? Maximum employment, right? So that means unemployment going down, and then stable prices, which we all know that's not happening. And then the last thing I really caught, and I want you guys to give me some of your notes as well in the chat that we can talk about really quickly for the last 5 minutes, is he says we can go quicker or slower, or we can pause. So overall, I think we're in the same place. Like the markets really are not going to react right away, like crazy upside, crazy downside. I like this level to break if we can stay here, and maybe he continues to answer some questions. But remember, don't get so caught up. Like I said, Bitcoin, in my opinion, it does have room to come down either to 58 But even back into those 50, 55s, 56s before making this big move up. So 58, I'll probably give it a shot to look for a position. But if this market does want to sell off, which it easily could, I do think this was probably the low. And I think we would hold here and go to the upside here. So I think it's been a great stream. I think it's been a great day. Obviously, long term, hopefully we can just get slow rate cuts. Like slow rate cuts is what should allow this market to continue. Easier to get money. 50 basis points was mildly aggressive. The next one will be after the election. So, guys and girls, this has been a lot of fun. I do need to get some water and get ready for some other calls I have today. Down below, hit that like button. If you got any sort of value, always appreciate it. And hit that subscribe button. Do yourself a favor and go through some of these videos I have on my channel. There's a lot of free value here. And if you haven't gone through this 3-day course, it's completely for free. happybullrun.com. Go through it. You think gold will do a heavy retracement? Honestly, no. You got to give me like what you think about heavy retracement, what that means. But I think gold is what Bitcoin is about to do. So the key levels on gold, I would probably watch. Maybe we fall back into like 23 to 20, like into this zone here. But I think it gets bought up so quickly. So I wouldn't count on that. I wouldn't count on that. Okay. Guys, I hope you all have a good rest of your day. Jerome is still live speaking. We'll see how these markets react. Don't get caught on the wrong side of the market, especially for all the traders on here. And be sure to subscribe down below. Hope you guys have a great rest of your day. Wish you guys many blessings in your portfolio. Trade safe, invest safe, and have a great rest of your week. See ya.